The WisdomTree Cloud Computing Fund, NASDAQ WCLD, has experienced a dramatic surge in short interest, increasing by 28,783.9% as of mid-July. This spike has brought the total short interest to 895,400 shares, up from just 3,100 shares at the end of June. The short interest ratio, which indicates how many days it would take for short sellers to cover their positions based on average daily trading volume, currently stands at 6.9 days. This indicates a significant bearish sentiment among investors towards the fund, which tracks an index of U.S. companies focused on cloud software and services. The fund's recent performance reflects this sentiment, with WCLD stock opening down 2.9% at $34. The fund has fluctuated within a 52-week range of $27.14 to $41.87 and holds a market capitalization of $341.70 million. The price-to-earnings ratio stands at -15.68, indicating that the fund is not currently profitable, which may contribute to the increased short interest. Despite this, institutional investors have been adjusting their positions, with notable acquisitions from hedge funds such as North Star Investment Management Corp. and Bank Transatlantique SA. These movements suggest a mixed outlook, with some investors potentially seeing value or a rebound opportunity in the fund's focus on the burgeoning cloud computing sector.
Robinhood Markets, NASDAQ Hood, has seen a significant shift in its market perception as several financial analysts have raised their price targets for the company's stock. Notably, Needham & Company LLC increased their price target from $71 to $120, maintaining a buy rating on the stock. Similarly, Piper Sandler, Deutsche Bank, JMP Securities, and Mizuho have all adjusted their price targets upwards, reflecting a growing optimism about the company's financial outlook. The stock opened at $99.90 on Thursday, with a market capitalization of $88.46 billion, and has shown a robust performance with a P/E ratio of 50.71 and a P/EG ratio of 5.03, indicating strong earnings growth potential relative to its price. The positive sentiment is further supported by Robinhood's recent quarterly earnings report, which revealed earnings per share (EPS) of 42 cents, surpassing the consensus estimate of 30 cents. The company's revenue also rose to $989 million, a 45% increase from the previous year, highlighting a significant growth trajectory. This financial performance suggests a strong return on equity of 17.69% and a net margin of 50.13%, underscoring the company's operational efficiency and profitability. Institutional investors have been actively increasing their stakes in Robinhood, with notable investments from IQEQ Fund Management Ireland Limited and the Teacher Retirement System of Texas, indicating confidence in the company's future prospects. The upward revision of stock price targets and robust earnings performance suggest that Robinhood Markets is poised for growth, potentially leading to increased investor interest and stock price appreciation. However, insider trading activity, with significant shares sold by company executives, may raise questions about insider confidence. Nevertheless, with 93.27% of the stock owned by institutional investors and hedge funds, the overall market sentiment remains positive, suggesting a cautiously optimistic outlook for Robinhood Markets in the near term.
Qatar is experiencing a surge in international investment as it advances its economic diversification agenda under the Qatar National Vision 2030. The Gulf state is becoming increasingly attractive to global investors due to its strategic location, stable economic policies, and government incentives aimed at fostering industrial and technological projects. Irina Dusimbakova, co-founder and president of Licorne Gulf, highlights two key trends: the influx of direct investments supported by Qatari government incentives, and the growing capital from Europe, Central Asia, and the United States targeting Qatar's infrastructure and technology sectors. These developments position Qatar as a gateway to vast markets in Africa, Europe, and Asia, potentially reaching up to 5 billion people by 2030. Qatar's appeal is further enhanced by its tax-free zones, particularly the Qatar Free Zones, QFZ, which provide additional incentives for foreign businesses. The country's state-of-the-art infrastructure, including the award-winning Hamad International Airport and the extensive Doha Metro network, supports its ambition to become a leading business hub in the Gulf. Despite concerns that investment might slow after the 2022 FIFA World Cup, Dusimbakova asserts that the event served as a launchpad for sustained growth, with Qatar continuing to capitalize on its momentum through strategic and sustainable initiatives. As Qatar solidifies its role on the international stage, it offers a blend of luxury living, stability, and a fully digitalized economy, making it an attractive destination for global investors.
Applied Materials, Inc., NASDAQ AMAT, a leading provider of manufacturing equipment for the semiconductor and display industries, has received a consensus recommendation of moderate buy from 25 brokerages. According to MarketBeat ratings, the stock's average 12-month price target is set at $205.17, reflecting bullish sentiment from analysts. Notably, Morgan Stanley and Barclays have both assigned equal weight ratings, adjusting their price targets to $169 and $170, respectively. Meanwhile, Mizuho and Citigroup have given outperform and buy ratings, with targets rising to $220, suggesting confidence in the company's growth potential. Applied Materials reported a robust quarterly performance, with earnings per share, EPS, of $2.39, surpassing consensus estimates of $2.31. Revenue for the quarter reached $7.1 billion, slightly below expectations but marking a 6.8% increase from the previous year. The company boasts a solid net margin of 24.06% and a return on equity of 40.15%, indicating strong profitability and efficient use of shareholder capital. The announcement of a quarterly dividend of 46 cents per share, yielding 1.0%, underscores the company's commitment to returning value to shareholders. Institutional investors maintain significant interest in Applied Materials, with hedge funds and institutional stakeholders owning over 80% of the stock. Recent insider trading activity includes the sale of shares by Sal Adam Sanders, reflecting a 9.59% reduction in his position. As the semiconductor industry continues to thrive, Applied Materials, strategic positioning, and analyst endorsements suggest a favorable outlook, although market participants should remain vigilant of broader economic conditions that could impact the sector.
Q2 Holdings, Inc., NYSE Q2, a provider of cloud-based digital solutions for financial institutions, recently had its stock price target increased by Needham and Company LLC from $110 to $115, maintaining a buy rating. This adjustment comes amidst a flurry of analyst activities, with firms like Cantor Fitzgerald and J.P. Morgan Chase & Company also initiating coverage with overweight ratings and price targets of $110 and $115 respectively. Despite these optimistic projections, the stock opened at $76.52 on Thursday, reflecting a 5.8% decline, highlighting a potential disconnect between analyst expectations and current market sentiment. The consensus among analysts, as reported by MarketBeat.com, is a moderate buy with an average target price of $101.06. This suggests a favorable long-term outlook for Q2, despite recent price volatility. The company's market cap stands at $4.78 billion, with a notably high price-to-earnings P/E ratio of 1,530.71, indicating that the stock is potentially overvalued based on current earnings. Additionally, insider selling activity, including transactions by General Counsel Michael S. Kerr and Director James Offerdahl, might have contributed to the recent dip in stock price, as it often signals insiders' belief that the stock is trading at or above its intrinsic value. Q2 Holdings' strategic focus on providing digital banking platforms positions it well in the evolving financial services landscape, as more institutions seek to enhance their digital capabilities. However, the high P/E ratio and recent insider selling could raise concerns among investors about the sustainability of its current valuation levels. As hedge funds and other institutional investors adjust their holdings, the coming quarters will be critical in determining whether Q2 can align its market performance with the positive analyst outlooks.
Krystal Biotech, NASDAQ, KRIS, is set to release its Q2 2025 earnings report on Monday, August 4th, before the market opens. Analysts predict earnings per share (EPS) of $1.20 and revenue of $95.42 million for the quarter. This follows the company's previous quarter performance where it reported an EPS of $1.20, which fell short of the consensus estimate of $1.38 and revenue of $88.18 million, missing the expected $98.66 million. Despite these misses, analysts remain optimistic, projecting an EPS of $6 for the current fiscal year and $10 for the next. Krystal Biotech stock has shown resilience, trading up 2.0% to open at $156.98, with a market cap of $4.54 billion. This performance is supported by strong insider confidence, as insiders hold 13.70% of the company's stock. Furthermore, institutional investors have been active, with significant stake increases from entities like Murray Asset Global ETFS Holdings Limited and AQR Capital Management LLC. Analysts have set an average target price of $211.33, reflecting a consensus buy rating, with notable price targets from Citigroup and H.C. Wainwright. The upcoming earnings release is crucial for Krystal Biotech as it continues to commercialize its genetic medicine, VYJUVEK, for treating dystrophic epidermolysis bullosa, DEB. The company's performance and strategic direction will likely influence its stock trajectory, particularly in light of the recent insider transactions and institutional interest. Investors and analysts will be keenly watching the earnings report for insights into the company's growth prospects and operational efficiency.
Semiconductor is set to announce its Q2 2025 earnings before the market opens on August 4th. Analysts project earnings per share (EPS) of 54 cents and revenue of $1.45 billion, aligning with the company's guidance of 48 cents to 58 cents EPS. In the previous quarter, Semiconductor reported an EPS of 55 cents, surpassing the consensus estimate of 51 cents, with revenue meeting expectations at $1.45 billion. Despite this, the company's revenue was down 22.4% year-over-year, reflecting a significant decline from the previous year's $1.08 EPS. Analysts forecast an annual EPS of $3 for the current fiscal year and $4 for the next. The company's stock, trading at $56.82, has experienced fluctuations, with a 52-week range between $31.04 and $78.61. Despite a strong position in automotive and industrial markets, analysts have mixed views on its stock. J.P. Morgan Chase & Company recently lowered its price target to $48, while Roth Capital and KeyCorp have issued more optimistic targets of $70 and $65, respectively. Institutional investors such as AQR Capital Management LLC have increased their stakes in Semiconductor, highlighting continued interest in the company despite recent performance challenges. With a market capitalization of $23.74 billion and a P/E ratio of 39.46, the upcoming earnings report will be critical for assessing Semiconductor's strategic direction and market valuation.
Keysight Technologies, NYSE, Keys and Advantest, OTCMKTS, ATEYY, both prominent players in the technology sector, are under scrutiny as analysts evaluate their market positions and financial metrics. Advantest, a leader in semiconductor and test system products, outperforms Keysight in terms of revenue and net income, boasting $5.12 billion in revenue compared to Keysight's $4.98 billion. Despite this, Keysight's stock appears more appealing to institutional investors, with 84.6% of its shares held by such entities compared to Advantest's negligible institutional ownership. This suggests a strong belief in Keysight's potential market performance among large investors. From a valuation perspective, Keysight trades at a lower price to earnings P/E ratio of 37.24 compared to Advantest's 54.78, indicating that Keysight might be undervalued relative to its earnings potential. In terms of volatility, Advantest's beta of 1.64 suggests it is significantly more volatile than the S&P 500, while Keysight's beta of 1.11 indicates slightly higher volatility than the market. Analysts currently favor Keysight, citing a higher consensus target price and potential upside of 18.20%, alongside a stronger buy recommendation profile. This analysis highlights the nuanced considerations investors face when evaluating these technology firms, balancing profitability and market volatility against institutional confidence and valuation metrics.
Axos Financial, NYSE recently saw its price target increased from $90 to $94 by Keefe, Bruyette, and Woods, maintaining a market perform rating. This adjustment comes amidst mixed ratings from various analysts, with some downgrading the stock to a sell while others maintain a buy rating. The consensus target price stands at $90.86, reflecting a moderate buy sentiment. Despite the price target increase, Axos Financial's stock declined by 2.3%, opening at $84.38, which is below its recent peak of $88.46. The company has shown resilience with a 10.5% increase in quarterly revenue year over year, surpassing analysts' expectations with earnings per share of $1.94 against a forecast of $1.82. In addition to the positive earnings report, Axos Financial's board authorized a $100 million stock repurchase plan, indicating confidence in the company's valuation. Stock buybacks often signal management's belief that the stock is undervalued, potentially providing support to the stock price. Institutional investors hold a significant portion of Axos Financial, with recent activity indicating a growing interest, as evidenced by increased holdings from hedge funds and advisors. The company operates primarily in the consumer and business banking sectors in the U.S., offering a variety of deposit products. As market dynamics evolve, Axos Financial's strategic decisions, including the buyback plan and its performance amid analyst ratings, will be key factors for investors to watch.
Rush Street Interactive, NYSE RSI, a prominent player in the online casino and sports betting industry, saw its stock price target raised from $17 to $21 by Needham and Company LLC, reflecting increased optimism about the company's growth prospects. The firm maintains a buy rating on RSI, aligning with other analysts such as Jefferies Financial Group and Macquarie, who have also issued favorable ratings. RSI's recent quarterly earnings report exceeded expectations with an EPS of 11 cents, surpassing the consensus estimate of 8 cents, and reported a 22.2% increase in revenue year over year, highlighting robust operational performance. Despite the positive analyst sentiment, RSI's stock traded down 4.0%, opening at $19.35, possibly influenced by insider activities where significant share sales were reported. Director Masi Nicolo De and CEO Richard Todd Schwartz sold substantial shares, which could have contributed to short-term market jitters. Nevertheless, institutional investors like Vanguard Group and American Century Companies have increased their stakes, signaling confidence in RSI's long-term potential. With a market capitalization of $4.43 billion and a moderate buy consensus, RSI's strategic positioning in the expanding online gambling market continues to attract investor interest.